Good morning, traders. Welcome to Game Edge Pre-Market Prep on Wednesday, July 30th, 2025. As always here at Game Edge, we'll start with our three pillars: sentiment, structure, and trend. Make sure you're following us on YouTube. Like and subscribe. You'll be notified when we go live, as well as follow us on X for our intraday content posts, as well as pre-market prep and post-market review of the day. Starting with our market trend model, obviously this is our trend indication based on the tick index. With the tick index basically is buying versus selling within the overall market. You can check that out at your favorite investing website. The key takeaway here is this bolded white line. This is our instantaneous CT or cumulative tick. This gives us an indication of buying versus selling by market participants, keeping us on the right side of the trend of the overall market. As you can see from yesterday and the past previous days, from the upper left to lower right, below our shorter term moving averages, which is our momentum or trend indication, indicating that there's more selling occurring in the market versus buying the past few days. Obviously, yesterday also kept us on the right side. I was discussing pre-market. We would need to see this bolded white CT start turning up above these moving averages, indicating more buying versus selling, but that did not occur, and we actually started moving to the downside, making lower lows on the tick index around the 12 o'clock or 11 o'clock time frame into the 12 o'clock time frame. Up here, new highs versus new lows indication. We did have new highs outpacing new lows slightly, so obviously more stocks being accumulated than sold. And then on the filtered cumulative tick, plus 1,000, minus 1,000 larger block orders, we were seeing institutional selling for the majority of the day. Obviously not significant, but just below the zero line, as well as our cumulative tick moving to the downside. Staying below that zero line, indicating that there's more selling versus buying within the overall market. So anyway, we'll keep an eye on that today, heading into the day. Obviously, we're still above our colored ribbon for our longer look back period, red above cyan. So longer positioning is still to the upside and bullish. But if we start seeing this bolded white CT cutting into this colored ribbon, we'll move to a more cautionary stance, and we'll watch how we interact with these shorter term moving averages. Moving on to the SPXA, obviously this is the cruise ship. If you've been following us for any amount of time, these contracts turn over less than the SPXP. We separate the SPX into the SPXA and SPXP, and we follow the SPX options complex because it's the most liquid, and we can get an overall view of market participants' positioning. So looking at obviously all expiries turned on here, we are still call dominated via institutional positioning. You'll notice this line in the sand here, 64.45. This is that transition area via the SPXA that we have outlined here, and then we have 6,500 to the upside. So we'll watch this area intently. 6,400 was that kind of stopping point yesterday, and then if we move up to above 6,400, 64.45 to 64.50 on the SPXA. Also, just a reminder that the SPXA, obviously, since these contracts do not turn over as rapidly, these do not exert as much force intraday, but this just gives us a 30,000 foot view of what is occurring. And you can see August expiry coming up here, the expiration percentage heading into that expiry. Moving on the SPXP, all expiries turned on. We are still call dominated above and below spot price, but you'll notice we're seeing some erosion of the in the money calls below us, as well as the out of the money call speculation. And you'll see that if you go back and watch our pre-market prep from yesterday, the net delta column was completely green. But we've seen that change. We've starting to see some reds come into play on the net delta, again indicating that the in the money calls below us most likely were closed or monetized, and then exposing these out of the money puts to the downside, as well as the out of the money call speculation to the upside, eroding a little bit here. Transition area for the all expiries, so you'll notice those unambiguous there, 63.70, 63.75, and then 63.90, 63.45. Almost the same line in the sand as yesterday. We tested that 6,400 about 3 times until we started selling off into the 11 o'clock hour to the downside. You also notice 6,300 down here. It's a key level below us on the all expiries. We still have 6,500 up here, which is peak X and COI. So we need to get above 6,400 to start traversing to the upside. And we need to see these out of the money calls continue to repair themselves, at least on the short term, closest to the overall spot price for the upside movement. Moving on to the SPX GEX ratio. Again, this is like a put call ratio, but we add the time component, which is gamma to it. I discussed yesterday about the possible dropping or divergence via the SPX GEX ratio. And this would resolve one of two ways. We'd see spot price continue to appreciate, and the SPX GEX ratio would turn back to the upside, indicating that short-dated call gamma was going into the overall complex. And again, call speculators were again entering the complex and speculating to the upside. Or we see the overall GEX ratio start to drop, and the SPXP price action would also would drop also as this came down. So again, indicating that short-dated call gamma was leaving the overall structure, and short-dated put gamma was entering. Again, reminder that this is spot price sensitive. So as the spot price traverses the overall SPX options complex, you will move those out of the money and in the money contracts. Conversely, either way, via the plane movement of spot price up and down the overall structure. But again, showing a quick drop and a decreasing GEX ratio, indicating that out of the money call speculation waning pretty rapidly. And then moving to the downside, we're capturing more of those out of the money puts below spot price. Those are now in the money, again, continuing to drop the GEX ratio. We're still above that one line, again, slightly bullish, but we'll watch this GEX ratio as we traverse the day over day to see for any change of structure. Moving on the delta balance. This is looking at separating the overall option structure above and below spot price. So the key takeaway here is, if you want the overall structure to maintain its bullish stance, this green is the out of the money call speculation. This dotted line, that's above spot price. The red is below spot price. These would be either in the money calls below spot price or out of the money put speculation. As spot price moves down, those would capture those as in the money puts. And then the delta balance is the aggregate of these two planes together. So you'll notice yesterday, significant drop in the green line. So that's again indicating out of the money call speculation dropping rapidly via either price depreciation or closing or monetization of those calls. And then delta balance dropping rapidly, indicating obviously call speculators were losing that overall grip within the overall option structure pretty rapidly yesterday. Now you'll notice that the delta balance does rebound here into the 31st, but then we see weakness after the 31st, possibly into Monday, Tuesday next week. And you see that large drop below zero of the in the money calls, or sorry, the left-hand plane, which is below spot price. That's the in the money calls. So again, that could be an erosion, as I discussed about the net delta column. Seeing those greens change to red under spot price as some of the in the money call holders take some profit and monetization as spot price starts to backfill on the SPX. So again, we'll continue to monitor this, but just a quick takeaway is the structure weakened pretty quickly yesterday, and we'll look at the 0DT as we head into today. So again, we'll watch this to see if the sands are shifting below our feet, indicating the overall structure and sentiment change as we head into the end of the week and into next week. Moving on to the SPXP net stack command. Obviously, this is the highest sensitivity levels that we'll be looking at today as price traverses the overall option structure and interacts with these levels. Net delta below us 63.40 in the money calls. Again, this will be an area that we look to be supportive. This will be a below transition area though as we start the day. So again, that could be a little bit weaker area as we pull into there. Out of the money calls 6,400. Obviously, we've referenced that strike to the upside multiple times now, and we tested it again 3 or 4 times intraday yesterday until we started seeing the overall sell-off. So charm out of the money puts, they're winning the battle at the moment. So these will be supportive as we pull back. So it may be difficult to push rapidly or much more to the downside. Obviously, this would be the area that we watch for interaction, 63.40, and then 6,400 to the upside out of the money calls. And then you see the gamma, obviously high sensitivity areas, as well as net vanna. So again, areas to watch to the downside, we've already discussed those, and to the upside, key sensitivity levels as we head into today. All right, let's look at our trading view scripts for today. Trading view script heading into today. I've outlaid the drunken sailor range as well as the As the transition levels for today, as we get ready to open, looking like we're going to open around 63.77 to 63.80. Let me check that real quick for everybody. So we've dropped a little bit. So 63.77 as we head into today. Sorry about that. Give me 1 second here. My auto scaling messed up there. I'm not sure what happened there. Okay. So heading into today, it looks like we're going to open around 63.77 roughly. So that's going to be within the overall transition area. Again, as we discussed within the transition area, this is unambiguous for today. We're 63.75 to 63.80. If we're below the transition area, we would lean a little bit more weak and a little bit more bearish, but you will be within the overall drunken sailor range. So again, you're at the mercy of the volume metrics, intraday volume metrics, which will be our vol M command. Bottom downside to the DS would be 63.70. If you watched our pre-market prep yesterday and our game plan, it worked out pretty well. We started getting into the top of the drunken sailor range below 6,400, and we said if we had an opportunity to short via the top of the drunken sailor range of 6,400, we would, and we dropped down to the transition levels and then on through the transition levels to the bottom of the drunken sailor range. So excellent trades yesterday via overall SPX pre-market game plan. So today we're kind of looking at the same areas. Transition levels, if we're below those would be an opportunity to short for a move down towards the bottom of the drunken sailor range at 63.70. Below 63.70, we would be full short, down, most likely pull down towards that 63.40, 63.50 level that we discussed on the net stack command. If we're above the transition levels, again, within the overall drunken sailor range, these are shorter term kind of butt in the seat trades, but we'd look for a trade up towards 63.90, and then obviously 6,400 would be that area we'd watch for some stalling and possible rejection. So again, that might be a short opportunity area as we move into their overhead, depending on what our intraday volume metrics look like. If we do get above 6,400 and see the vol M command with positive slopes, call and put centroid to the upside, indicating call speculation, then we look for a move up towards that 64.25 level, most likely capping our price to the upside. And then obviously on the net stack command, we look at those intraday because we do get automatic updates for our members. So again, if we see that overall sensitivity levels continue to change to the upside, as well as the volume metrics indicating that we could go higher, then we'd be looking up towards 63.40, and most likely that would be a cap on price. We'll go back and review the 0DT for a minute. So that'd be our trading plan for today. Above transition level, possible long for 63.90, rejection of the 63.90 to 6,400 area, possible short for a move back down towards at least transition, and then below transition to the bottom of the drunken sailor range. The bottom of the drunken sailor range may be supportive, but if we drop through it, most likely full short for a move down towards 63.50 to 63.40. So let's go back and review the 0DT real quick. Sorry about that. Looks like my 0DT got deleted, so let's pull that over real quick for everybody. There we go. So 0DT for today, put dominated, again, above and below spot price as we move into the open. Drunken sailor range outlined here via the yellow. And then our overall transition areas, again, I discussed that moving to the bottom of the drunken sailor range and below. Then when you be short for a move down towards the 63.50, 55 level, that'd be COTMP, and then 63.25 to the downside. We're not anticipating that area today, but we'll continue to watch that. And then above transition, move to the bottom of the top of the drunken sailor range, and then 6,400. Above 6,400, we have COTMC, proprietary levels for game edge there. How the money calls become in the money, and usually we see some sort of monetization into that area. So that's the trading plan for today. Again, thanks everybody for joining us. Sorry about that. Got a couple things deleted there on my overall browser and had to scroll back through really quickly. So if anybody wants to go over anything for today, discuss yesterday's pre-market prep, look at any single stocks, I'd be happy to hang around for a few minutes. Again, make sure you review the overall trading plan for yesterday. It worked out very well. Come join us in Discord at GameEdges.us. Again, full Discord, all our tools turned on, significant amount of education, great community. of traders, from former market makers to large money managers now. Oh, great. Glad you could capitalize, Sherman. Yeah, coin and NVIDIA. I will look at those. Yeah, we have the full gamut of new traders, and seasoned traders, or traders in the middle of their trading journey. Just the whole range of experience within our overall community, which is great, and everybody helps everybody, and the education again is just extensive that we provide. So all right, we'll look at NVIDIA real quick. Call dominated, all expiries turned on, spot price significantly above transition, PGX COI 180. So that would be an area I'd look for, most likely probably some stalling at the moment unless the overall complex moves up. Significant amount of out of the money call speculation still to the upside, as you see COTMC up there, but 180 would be the first stopping point. Let me look at Friday's expiry. So 180 across the board above transition, COTMC 185. So on a shorter term weekly look, for Friday's expiry, 180 stalling, and then 185 most likely would be the cap. On out into August, the next week, transition widens a little bit, so a little bit of uncertainty, but and we do see COI and PGAS drop a little bit to 175, but still bullish structure, call dominated. And then I would assume that's the 15th, so we do see that drop, transition, so call dominated still though. And then the expiry 175. So we do see a little bit of dropping through the middle of August with the overall structure, PGX and COI, but still maintaining above transition area and call dominated. So everything looks still very bullish on NVIDIA, again, unless we see a significant change in structure and sentiment there. All right, coin, call dominated above and below spot price, all expiries turned on. 390 would be that area to the upside I'd be looking at. That's PGX COI. COTMC at 405. Transition areas. Transition's a little wide, and spot prices within transition. So a little bit of uncertainty there within all expiries. Let's see what Friday looks like. So within the overall transition area, again, this is kind of a uncertain area, back and forth within transition, but you do see PGX and COI all the way up there at 435. So I think those holders will be obviously a little disappointed. Significant call speculation to the upside though, but within the overall transition, a little chopping action. Let's see the next week. So transition is undefined there just because the low OI, see that OI drops pretty significantly. So it's difficult, obviously, to ascertain the overall structure. And that's why we want to make sure, if we're looking at some of these stocks, we want to make sure we have enough OI. OI gives us the overall dealer control metric that helps us understand that if the stock price will be under a significant amount of option structure control. So, but anyway, heading into this Friday, that's what I'd look like here. Stalling, possibly top of transition area, call dominated above and below spot price. So yeah, let's look at MSTR. Let me check the OI on this one also. So MSTR has significant OI, which is good. All expiries turned on. We see PGX up here at 430, but we see COI at 390. That's actually below spot price at the moment. We're call dominated, but you'll notice a significant amount of puts spattered in the overall options complex here, especially these out of the money puts to the downside speculation here. Let's look at Friday's expiry. So 450,000, so that's good. PGX COI at 430. I would assume those people are most likely going to be disappointed. Wednesday, you have 2 days to get up to that level, which is most likely going to be difficult because of transition area. You're right in the middle of transition, so you'd have to get above 402.50. You see some in the money puts overhead here. Most likely will be a headwind to traverse, at least on a shorter term time frame. And then you see Index down here at 370. So if we're below transition area, it could move down towards these levels below us. COTMP at 390. So call dominated is supportive. The structure looks a little bit more bearish right around spot price though, with the in the money puts overhead and out of the money call speculation. So 395, obviously key strike here, and then transition area, and then 420 to the upside also. But again, it looks like probably, I'm not sure what this previously looked like, but possible erosion of structure, maybe around spot price back and forth. So this would be an interesting one to watch. Again, within the middle of transition, significant uncertainty, and you see those key levels, top of transition here, P-trans and N-trans there. So those would be the key areas I'd be watching. Okay, take a look at Google. Yeah, we'll take a look at Google. So call dominated, all expiries turned on. Not a significant amount of upside here, at least from all expiries. So PGX COI at 200. Let's see what the structure is for Friday. Confluence of that 200 level, PGX and COI. So again, not a lot of upside speculation. Expected move is 7 points. So that puts you at 202, which is right at that COTMC level, and 200 of PGX and COI. So 5 points to the upside. That gives you a 3% upside if you're looking for that. But you're within, sorry about that. You're within the overall transition area. So again, you'd need to get above the transition area at 195 for a move up towards 200, and most likely capping spot price there, at least into Friday. Downside, if you're below transition, it looks supportive in the money calls via this green net delta. 187.50, and you kind of see this net GEX bell-shaped curve. So this is where your highest sensitivity areas are going to be, obviously around spot price, in the money and at the money there. So, and then you see POI at 187.50, which is right under spot price. So this is indicating that short-term advantageous market participants are looking for short-term pullback, not a significant downside. So again, structure still looks fairly bullish, and any pullback most likely would be supportive into that 187.50 level. So those would be the key areas I'd be watching. As always here, mechanically, we go through these. You look at transition. So you look at P-trans and N-trans. That's the transition areas. Are you above or below those? Where PGEX and COI are, and where NGEX and POI are within the overall structure, and is it supportive on any pullback? And as of now, it would be supportive on pullbacks, so in call dominated. So yep. So all right, thanks everybody for joining us. Glad we could go through a few single stocks. Again, make sure you follow us, like and subscribe, and you'll be notified anytime we go live or post content on X. So with that, everybody have a great day. Thanks.